stop. Before you hear the words 50-year mortgage, I want you to hear the words permanent debt trap. What we are witnessing is a proposal to fix the American housing crisis. But this isn't the solution. It's a financial trap designed to turn the American dream of home ownership into a lifetime rental agreement with the bank as your landlord. This proposal is being pushed as a lifeline. I am going to show you why it's an anchor. In this video, I will show you the simple math they are hiding from you. I will expose who really benefits from this plan, and I will show you why this idea, if it becomes real, will trap an entire generation in debt. To understand why this is happening now, you have to understand how we got the 30-year mortgage in the first place. Before the 1930s, mortgages in America were brutal. Forget paying down your house. The typical loan was a 3 to 10-year term, and you paid interest only. Imagine that. For 10 years, you pay the bank every single month, and your debt doesn't drop by a single dollar. Then, at the end of the term, you faced a massive balloon payment, where you had to pay back the entire loan amount, all at once. What do you think happened when the Great Depression hit? The entire system collapsed. Millions lost their homes overnight. It was a foreclosure crisis on a scale we cannot even imagine. The U.S. government had to intervene. In 1934, they created the Federal Housing Administration, the FHA. In 1938, they created Fannie Mae. Their goals were simple: make mortgages cheaper, safer, and stabilize the market. For the first time, they standardized a loan where your monthly payment actually reduced the principal. By the 1950s, this new invention, the 30-year mortgage, became the American standard. It exists today not because it was perfect, but because the government created it to stop mass foreclosures and make home ownership possible for the middle class. And now they are considering changing it again. Fast forward to today, we are in a new crisis, a housing affordability crisis. Prices are in the stratosphere, and interest rates have locked millions of people out of the market. So, what's the proposal being floated? The Federal Housing Finance Agency, the FHFA, is exploring the 50-year mortgage. The pitch is simple, deceptively simple. It'll lower your monthly payments. That's the headline. That's what they want you to focus on. But that headline doesn't just hide the details, it hides the entire story. Let's run the numbers, the real numbers. The media keeps using one specific example, so let's use theirs. Let's say the median home price is $415,200. You put 10% down. The interest rate is 6.17%. With a standard 30-year mortgage, your payment is $2,288 a month. With the new 50-year mortgage, your payment would be $2,022 a month. That's a savings of $266 a month. And that is the only number they want you to see. They are betting that you will stop your calculation right there. Now, let me show you the part they are deliberately leaving out, the part that changes everything. Let's look at the total interest you pay for the exact same house. On that 30-year mortgage, you will pay a total of $431,117 in interest over the life of the loan. A huge number, right? Well, on the 50-year mortgage, you will pay $751,113 in interest. Let me say that again. You are paying nearly $350,000 more in interest. You are paying almost double the interest just to save $266 a month. But it gets so much worse. The most terrifying part of the 50-year loan isn't just the interest, it's the equity, or rather, the complete lack of it. Equity is the part of the home you actually own. It's how you build wealth. On a 30-year loan, you build equity with every single payment. On a 50-year loan, you are basically treading water for decades. Let's look at that same loan. After 30 years of payments, 30 years of paying over $2,000 every single month, the 30-year borrower is done. They are 100% debt-free. They own their home. The 50-year borrower? After 30 years of paying, they still owe $386,000. You read that right. After 3 decades, you paid thousands upon thousands, and you still owe almost the entire principal you started with. This isn't building wealth. This is servicing debt. This is a life sentence. Do you like the sound of this? Your mortgage payoff date, the year 2075. You could be blowing out the candles on your 80th birthday cake and still be writing a check to the bank for your mortgage. So you have to ask the most important question. If this is such a catastrophically bad deal for the home buyer, who is it good for? Who really benefits? It's not you. The winners are the people who profit from transactions, not from ownership. The banks win. They get to collect that $350,000 in extra interest income. They get to hold a performing asset on their books for 50 years instead of 30. The builders win. Lower payments mean more people can qualify to buy their new homes, keeping demand artificially high. Wall Street wins. It keeps the entire housing machine running, fueled by your debt. The 50-year mortgage is a gift to the real estate industry. It doesn't fix the price of homes. In fact, it will make them go up. Think about it. If more people can suddenly afford the monthly payment, what happens? More buyers flood the market, bidding wars return, and prices are pushed even higher. A cheaper payment does not make housing more affordable. It just inflates the price. This entire proposal is a psychological trap. And I know this because it's been tried before. This isn't a new idea. It's a failed one. In the 1980s and 90s, Japan went through a massive housing bubble. Prices exploded. Young people were locked out. Sound familiar? Their solution? The 50-year mortgage. When that wasn't enough, it became the 70-year mortgage. And when that wasn't enough, it became the 100-year mortgage. They are called generational loans, where children literally inherit their parents' debt mortgage. That is the road this proposal puts us on, a road where you never truly own anything. You just pass the debt down. Politicians know this. Banks definitely know this. They know that humans are programmed to think in monthly payments, not in 50-year totals. We don't calculate the total cost. We ask, can I afford the $2,022 a month? That's the trap. The harsh reality is this. The real problem isn't that the 30-year mortgage is too short. The real problem is that we don't build enough homes. The real problem is that zoning laws block construction. The real problem is that costs are surging. Stretching the debt doesn't fix the supply. It just hides the problem. It's financial duct tape covering a massive crack in the foundation. This proposal is a legal and regulatory nightmare. Fannie Mae and Freddie Mac don't buy loans longer than 30 years. Congress would have to rewrite the fundamental rules of the entire housing market, all to push this through. This is not a path to home ownership. This is a path to permanent debt. This is not a solution. It is a symptom of a broken market. And this is not an opportunity. It is a warning. The real question is not, how can I get the lowest monthly payment? The real question is, do I want to own my home, or do I want to rent it from the bank for the rest of my life? A 50-year mortgage doesn't solve the affordability crisis. It just stretches out the pain. If this video is helpful, share it. People need to know the math they aren't being shown.